Hello, everyone. What if I told you a company just announced its profit shot up 76%, but at the exact same time, its profit also dropped 18%? I know. Sounds impossible, right? Well, that's the wild story we're unpacking today with Alibaba. Welcome back to the channel, everyone. Today, we are diving deep into Alibaba's latest earnings report. And let me tell you, it is a roller coaster. This report tells a fascinating story about a massive company making some huge, risky bets on the future. We're talking about AI, we're talking about super fast delivery, and we're going to figure out if Alibaba is smartly sacrificing profits now to completely dominate later. Let's get into it. Before we dive in, just a quick disclaimer, this video is for informational purposes only. It's not financial advice. Always do your own research or consult a licensed financial advisor before making any investment decisions. All right, with that out of the way, let's talk about Alibaba. So for anyone who's new here, what exactly is Alibaba? Let's be honest, they're a beast. The simplest way to think about it is like this. Imagine if Amazon, PayPal, and Google Cloud all had a baby. That's Alibaba. Their main playground is China, with e-commerce sites like Taobao and Tmall, but their international business is growing like crazy. They are in a constant knockdown, drag-out fight with competitors, both at home and around the world. And that's the key thing to remember as we look at these numbers. All right, let's talk about those headline financials, because this is where that confusing profit story comes from. For the quarter, their revenue clocked in at about $34.6 billion US. That's up 2% from last year. Now, you might be thinking, 2% isn't amazing, and you're right, but, and this is a big but, if you ignored the businesses they recently sold off, their growth was actually a really healthy 10%. So that's not bad at all. But now for the profit puzzle. First, you've got what's called GAAP net income. Think of this as the official number. And it was huge, a 76% jump from last year. On paper, that looks amazing. But then there's the other number, non-GAAP net income. This is the one a lot of analysts like to look at because it ignores weird one-off things and just shows how the main business is doing. And that number was down 18%. So what is going on? Well, that giant official profit got a huge boost because some of their stock investments did really well. It wasn't from selling more stuff. The non-GAAP number, the one that fell, tells the real story of the business right now. It went down for one simple reason. Alibaba is spending a ton of money, and that is the big theme for today. Investment. Massive investment. So the big question is, where is all that money going? Well, the company basically has 3 main divisions now, and the numbers tell us everything. First up, their bread and butter, the China e-commerce group. Revenue here grew a solid 10%. That's great. But its profit actually fell by 21%. A 21% drop. This is ground zero for their spending spree. They're pouring cash into something called Taobao Instant Commerce. Basically, a huge push to get you anything you want delivered super fast. Next, and this is the star of the show, the international business. Wow. This part of the company is just on fire. Revenue shot up 19%. But get this, last year, they lost over 3 billion RMB. This quarter, they lost almost nothing, just 59 million. I mean, they are right on the edge of being profitable, which is just a huge win for them. And finally, we have the Cloud Intelligence Group. This is another massive bright spot. After being a little sleepy for a while, growth here just exploded. It's up 26%. And the reason? One word, AI. They said their AI-related cloud business saw triple-digit growth for the 8th quarter in a row. That's 2 straight years. Their cloud profits also jumped 26%. So the picture is pretty clear, right? They're taking the awesome profits from the cloud and using the nearly profitable international business to fund an all-out war in their core business back home. And hey, don't just take my word for it. Let's hear what the bosses are saying.
The CEO, Eddie Wu, was super clear. He basically said, "Our focus on AI and cloud is working great, and we made a decisive investment in quick commerce." He's not shying away from it. He's proud of it. The CFO, Toby Yu, said pretty much the same thing. He said, "The strength in our other businesses gives us the confidence and resources to make significant investments. They're telling us loud and clear, this is the plan." Okay, now we need to talk about something that might have you raising an eyebrow. It's called free cash flow. Basically, it's the real cash the company has left over after running the business and paying for upgrades. It's a super important health metric. Last year, Alibaba generated over 17 billion RMB in cash. Pretty good. This quarter, it was negative 18.8 billion. They didn't make cash, they burned through more than 2.6 billion US dollars. That is a gigantic swing, and it perfectly captures the story we've been talking about. They are burning cash to fuel their big investments in the cloud and quick commerce. So, what happens next? Well, Alibaba doesn't really give specific forecasts, but honestly, this whole report is kind of a forecast, isn't it? They're screaming from the rooftops that they're going to keep spending on their China business, and they expect the international and cloud businesses to keep crushing it. They're telling investors, look, our profits might look a little ugly for a bit, but we believe it's worth it. So how will Wall Street react? You're going to see two completely different stories. The bears, the pessimists, they're going to freak out about the 18% profit drop and the negative cash flow. They'll say the spending is way too risky and that competition is eating their lunch. But the bulls, the optimists, they're going to be laser focused on that incredible 26% cloud growth and the fact that the international business is about to start making money. They'll say this is a genius long-term move. So it all comes down to one question. Can the amazing growth in cloud and international make up for the cash burn at home? All right, so let's put it all together. What's my take on this? Here's how I see it. Alibaba is at a crossroads. They are in full-on transformation mode. Let's talk opportunities. 1, the international business is becoming a powerhouse. This could be a huge deal for the stock down the road. 2, the AI-powered cloud, re-accelerating to 26% growth is no joke. If they become the king of AI in Asia, the sky's the limit. And 3, they still have a $19.3 billion share buyback program. That's a huge vote of confidence. But, there are always risks. 1, the big bet on quick commerce is a gamble. If it doesn't work, that's a lot of money down the drain. 2, that negative free cash flow, it needs to turn positive again and soon. You can't burn cash forever. And 3, competition is just brutal. It's not letting up. So really, an investment in Alibaba right now is a bet on the new CEO's vision. It's a bet that all this short-term pain is going to lead to some serious long-term gain. So there you have it, the crazy, complicated, but super interesting story of Alibaba's latest quarter. It's a tale of 2 profits, a company spending big to win, and 2 new superstars emerging in their business. Now I want to hear from you. What do you think? Are you buying into this long-term plan, or does the cash burn make you nervous? Let me know your thoughts down in the comments. And hey, if this breakdown was helpful, do me a favor and hit that like button, and make sure you subscribe so you don't miss the next one. Thanks so much for watching, and I'll see you in the next video.